And good afternoon. Welcome into Market Talk here for this Thursday, May 26th. Great to have you with us. Thanks for making us part of your day once again. I'm your host, Jesse Allen. Find us online, markettalkag.com. All of our radio affiliates can be found there, our streaming sources, the news of agriculture you need, and much more. It's all online, markettalkag.com. Well, as we got into this Thursday, we wondered what direction the trade would take. Well, the soy complex, a rocket higher today, and it helped pull quarter wheat a little bit higher as well at one point today, although we did fade in winter wheat and corn. But we got lots to talk about. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us this afternoon. Bryan, good afternoon to you, sir. How are you?
Hey, Jess. Good afternoon. How are you?
I am fantastic. And, this soybean complex, I think, is doing fantastic today, too, Bryan. That was kind of the headline of the day with a lot of strength there. Meal and oil looked good, but the old crop July contract pushing up towards those highs once again.
Yeah, you had support come from a variety of areas. One is at least a lot of talk about China needing U.S. beans probably toward August, September. Ideas that because of the shorter crop in Brazil, that's becoming a little bit more, it seems like crystallized, or at least the market is voting more confidently there. The other area is the crude oil market up, as I look here, two to almost $4. Just continues to hold really well at $100 or better. And now you've got the front month up to 114. You got August crude up over 110 at 111.40 right now. Um, with tight world inventories, I'll tell you, that energy market, bioenergy, we've talked about this before. It seems just common sense that at some point the world's got to figure out if it's going to run on laser thin or paper thin supplies and still pursue a bioenergy type uh, program or programs that, yikes, you look at the plants that are coming online or expected to come online over the next 12 to 24 months. It
Mhm.
is a pretty big deal that the U.S. produce a big bean crop. So, yeah, big difference than 3 or 4 years ago.
Well, and one has to wonder also, we're hearing just some of the production challenges, of course, in the northern plains, and there's some worry that we could lose some corn acres, maybe even pick up some spring wheat and soybean acres potentially, although I think we still have some time on that to see. But, I wonder if that could maybe be a little bit of a factor into the soybean complex as well. One of those other side stories, so to say.
Yeah, it seems like most every year we kind of make a run toward the finish line with crops and farmers and I'm going to say their fighting spirit seem to move beyond the insurance deadlines, even though they don't necessarily have to if they can't get it planted. But as an example, talked to a couple of farmers in the North Dakota, South Dakota region, and I asked, "Look, the 25th. This was 2 days. The 25th tomorrow. What is your story? Are you going to take? Well, we'll go to the first." That was kind of the common theme. So,
Mhm.
so they'll probably still look if they can now. Watch the weather closely. If as advertised, it looks like there's a better chance of rain maybe starting tomorrow, but Saturday, Sunday, that might put the kibosh on corn acres. Does it go to beans? I don't know. It could. I mean, a day like today kind of makes the bean market kind of exciting to think about new crop beans where they're at, and then compare that to old crop beans. Gosh, you got 1726 on July, 1540. Let's just call it 45 on November. Uh, that's starting to make one wonder. Today is the highest close on the soybean November soybean contract ever for this November contract. The contract high came on the 24th. That was when the war broke out, the 24th of February. And that day we really torpedoed right back down the negative territory. We had a huge spike up that day. So very good looking chart. We're up against the Bollinger Band, inverted head and shoulders formation. If it breaks the Bollinger Band, boy, it really points to about another at least solid dollar higher in November beans. And considering the discount to January, and then if you want to be bullish, again, talk about these plants that need crop for next year. And boy, it gets the story gets more interesting as we go here.
Definitely. The wheat markets have been curious here the last couple of trading sessions. We've moved lower, moved lower. Yesterday, we really kind of grinded our way back in all the grains. And then here today, it felt like traders, finally realizing some of the spring wheat challenges possibly, and we started to move the spring wheat complex back higher. That helped pull winter wheat higher a little bit before we faded, but spring wheat and just the wheats in general. I know the Russia Ukraine port blockage news is out there. I know there's a lot of skepticism around that as well, and so maybe that's feeding in too. But you look at spring wheat, the leader today, and just the tone of the wheat markets. Brian, what's your thoughts there?
Well, yeah. So a nice, at least positive close for spring weight down in both hard red and soft red winter. Um, Boy, a lot of volatility and things move kind of quickly here. So when I look at, for instance, the September Minneapolis wheat today, 1291 closed, Jess, um, but it's still well off the high, and the high is 1406. Um, it's a race to the finish on acreage there. Weather, Manitoba, I want to say was only 10% planted, typically like 80% planted. So there's some of these issues that I think are going to resurface. Um, the problem with the wheat is trying to figure out what an equilibrium price is. That is, if you're an economist, you run these charts that show quantity supply, quantity demand it, and they cross over, and that's kind of the what the market price will be, or at least the perceived market price, and people start with that. Just giving sort of a far out example, but let's say an importing country, let's say Egypt. I don't know what somebody in Egypt, like either bakery or company that might make baked goods. I don't know where they stop buying. I don't know if it's here. I don't know what a fair price is. I don't know, if they pull back. So wheat's kind of hard to figure out. We do know the supply numbers are getting tight. The other interesting avenue is, boy, this war takes twists and turns, and I mean that's, I guess, war, and it seems like Russia kind of all of a sudden wants to, negotiate with food. From this guy's understanding, from Bryan's understanding, is Russia is willing to open travel ways if sanctions are listed. So, um, I so now the shoulder of responsibility to feed the world comes on. They put it back on our, let's say, our side. So we'll see what happens. I don't know how the world's going to react, but um, suffice it to say, it still looks like Ukraine's a I use the word mess. It's a mess in many respects, and you've got displacement. I don't know the last number I heard, 13 million out of 44 million. That's a lot of people displaced. Supply chain disruptions. We talked about planting. You got some good planting in parts, but when I was having a conversation with the producer today, I want to put this in. I think what's a proper perspective. What farmer doesn't have breakdowns, right? So we're going to say every farmer has breakdowns or problems. What happens if you have problems in a country where you talk about supply disruptions and parts? How do you get parts? How do if your auger
Mhm.
breaks, that's the kind of stuff that I think just bogs this whole Ukraine equation down considerably, and there's likely to be waste with that.
Well, and I also wonder too, if those ports get opened, what are the insurance rates going to look like on some of those carriers moving out of there? I mean, that would be another hurdle I think to jump over. Brian, corn market. Let's go there a little bit. Corn feels like today was kind of the laggard of the three. But as we're heading towards this holiday weekend, I mean, you look at the closes, 765 on July, old crop 718 on new crop December. What's your thoughts on this corn market right now?
Um, yeah, so maybe the bulls are kind of losing their grip a little bit. So the question is, what's new? So what's new? Um, so planting's moving along. Sure, you can take a look at Monday's number and say, oh, it was 4% above what the market expected. Well, when push comes to shove and it gets later, farmers will work around the clock, especially when there's rain in the forecast. So that the number doesn't surprise me. That it's really the quality of the crop from here on out. You've got a lot of late planted corn. You got a lot of late planted corn in key growing states. Um, then what doesn't get planted, you're past the prevent plant date for the northern and northwestern regions of Minnesota, North Dakota, most south, other parts in North South Dakota that have a later date. But will farmers continue to plant? Let me put this into some perspective of something I think might be going on. So the July contract peaked at 824 and today closed at 765. So let's just say 825 to 765. Simple math is 35 and 25 is what, 60 cents. So we're off 60 cents in corn, if I did the math right. Um, all right. We're off 60 cents in corn. What's happened to, let's say, the equity market? So the stock market here recently bottomed at the Dow index at 30,588 is at 32,665. So over 2,000 point jump. Here's where I'm going. Wheat, corn, really have struggled here this past week, but the equities haven't. One theory that I'm putting forth is when there's not a lot else to trade, the fund managers look at, okay, do we buy corn up here? Do we sell corn? What do we do with our positions? I think a lot of them put stops up under kind of tight. Same thing in the wheat market, really high price. Do we keep adding thinking it can go higher? Or is there better value to investor money? After the stock market being down considerably from the first of the year, I wouldn't be surprised if portfolio managers are looking at their balance of value of commodities on one hand and stocks. Stocks have lost significant value, commodities have gained value. So when they weight their portfolio, I might make the argument that some of these portfolios may have been overweighted to commodities. And some of the commodities like corn, if planting's, I'm going to say, good enough, or if history tells you that late planting may not mean that much, may not. 2019 is an exception. Farmers get in the ground, they get a seed in moist soil, warmer, you know. The risk is with the crop down the road, and it's all bunched in one maturity window. So I'm wondering if that isn't something that kind of hit the wheat corn market this week so far as sort of this 3-day weekend coming up. If you're strongly long, the weather takes a turn for the better. We've seen kind of one less than great forecast after another after another. All of a sudden, we get into June, it warms up, the crop's sprouting, it's growing well. There's not maybe a reason to hang on to $8 corn. So it's one thought.
Well, it's a very, very plausible thought. I would agree with you. I think that's something to definitely take into consideration. And I think maybe some losing a little side. I think I have as well. That it's hey, we have a holiday weekend coming up, so that's another thing too. Maybe some profit taking and some things of that nature on the table. But very interesting thoughts, Brian. Let's move to livestock. Great day in the hog market today. Just really good strength there. Good export sales as
Yeah.
well in hogs.
Yeah, good export sales. I think I think the hog market's doing a really good job of, we talked about that equilibrium price. As we go back in time a little bit, we thought, gosh, in March, where does this thing slow down? And we were just shooting higher and higher, way above the cash index. And then all of a sudden it had a key reversal, head and shoulders, and all this downside. And then it's like, ooh, when are we going to stop going down? And now it's bounced back a good portion of that. So I think the trade, recognizes that, the hog market probably overdid it to the downside, and the buyers came in and bought. The market that's really kind of bugging me a little bit is the cattle market. And I don't know if it's just this cool kind of pattern and retailers aren't selling, whether it's inflation, whether it's just the idea that when we look at winter wheat conditions, pasture conditions in the Northwest, lack of maybe good gains or profits. Guys got rid of cows because of high price corn, that we've kind of stuffed the feedlots full. Ultimately, this could look really bullish, but we just can't seem to kind of flip the trigger to get the cattle market sort of on track. I was hoping we'd see a little better perspective in front of the Memorial Day weekend. But I got to tell you, as I talk to people throughout here's an example. I talked to a guy in Minnesota today. It was supposed to be warm. He said it's 54 degrees. Well, that doesn't feel like grilling weather. So, maybe there's some of that.
Well, that's a great point. I've thrown out this theory too with this cattle market. It feels kind of similar to hogs in that it's maybe trying to back itself down, find that floor, that support level, and then bounce off it to find that, as you've put it, equilibrium price. And I wonder if maybe that is some of what's going on in the cattle markets as well right now, Brian.
I think it is. And I think what has to happen too is inflation sort of raging. There has to be sort of from a consumer perspective, sort of a resignation or acceptance that, hey, prices are high. Well, we're still going to eat. Okay. Otherwise, I think the initial reaction when prices kind of go up kind of quickly, and you might back away from it. And and so I think I don't want to say inflation is becoming old news, but it's not new news. um, so maybe people are, kind of stepping back a little bit and refiguring, recalculating. Higher energy costs, as an example, it's a big deal. Sometimes, though, when you talk to a farmer and you say, "Well, let's really calculate how much that's digging into your, price per bushel on corn," it maybe sometimes doesn't look as bad when you do that, or that it's somewhat manageable. I'm not trying to sugarcoat it, but I'm hopeful that the consumer just, can come back in here and purchase beef. And I just got to think it's the sleeper out there too. You look at all this avian bird flu we've had this spring. What are consumers got to stock up on something at some point. Maybe they're not filling the freezer with beef, but if they do ever get to a point where they start buying a little more aggressively and we work through these heavier supplies, again, I've made the argument. I think the deferred futures, kind of have it right. When I look at that January futures, although it's down $6 from its high, it's still trading over 150. Stark difference from where the market is today.
I think you were right. And I think as well, maybe in the short term, it still might take a little bit for consumers. I mean, you look at the May food price outlook that was out this week, some rises there in numbers, some of the highest prices we've seen at the grocery store and in restaurants since 1980, 1981. So I think that's an interesting thing to think about. It's going to take a little bit for inflation to work through it. It sounds like. Brian, dairy market, any thoughts there as we look to head to the holiday weekend?
I think that story is the same as you and I have been talking about sometimes, so we could get into the minutia of it, but it's really trading at just a sideways pattern, but well above $20. So can't really get much above 25. Same thing there too. The consumer goes in the store and sees a gallon of milk price where it's at. It's like, ooh, okay, I'll take two, but not three. That type of thing. I think that's the long term hindrance to milk. Well supported though. Talked to some dairies this week again. Uh, Labor is an issue and ongoing issue. I think a lot of dairies, I'll be frank, I just think the managers are exhausted. Um, they're not thinking expansion. They just want to get through this sort of COVID period, this labor period, high priced input period. They want to hold these herds together. But the one thing is that's probably a negative to milk is that beef prices or, cattle prices aren't higher, that it's kind of a no-brainer to ship cows. So, but the definite concern is just how long or prolonged will input costs be. If you're a dairy that grows your own product, that might be one thing. That's still more expensive than it was a year ago. But if you got to go out and search and buy a lot of meal or corn, it's pins and needles for these guys. Typically, prices tip over as we head into June on corn, beans, those markets. Typically, as if we have a rally into the spring, if things go well, typically means we're looking for average, above average crops. This year, it's not typical, so it's a challenge, and the dairy producer feels like every other producer. Inputs have come right up behind them.
Well, Brian, great analysis as always. Any final thoughts you have for us before we run out of time, real quick?
I think I look at something like the corn market. We've talked the last couple of weeks about maintaining a balance. You look at December corn. One week we're at 765, 766 on December corn. The next week we're under 720. So are we tipping this thing over, or is it just a correction in the market? So really, the market. One way to view this is corn, soybean. Now soybeans are back up, but they've been kind of on pause, as in they're not racing higher, they're not falling apart. They're giving you a real opportunity to sort of concentrate on planting the crop. Now that the crop's getting in the ground, come back to your marketing and just think about a balanced approach here. I'm not trying to cop out on anybody, but if you don't outguess the weather, you can outguess the market. So that's how that goes. 2/3 of the world's corn crop is northern hemisphere. Um, so just keep a balance. Make good cash sales, cover them with calls or bull call spreads or some kind of strategy. Purchase puts. But make sure you're doing the right things. The do nothing strategy could be boom or bust.
Well, Brian, if producers need a little bit of help with their strategy, I know they can reach out to you and the team there at Total Farm Marketing very easily. How can they do that?
Yeah, or if they want a lot of help. um, so Best is phone call 800-334-9779. We've got a couple of Bryans if you want to talk to me. I'm Bryan with a Y. Email, same thing, Bryan at totalfarmmarketing.com. So Bryan with a Y, or check us out on our website, totalfarmmarketing.com. I guess I would just argue, the best is probably just communication verbally. So we'll do a phone call.
Definitely. Well, Bryan, we appreciate the time as always, sir. Enjoy the rest of your week and your holiday weekend up ahead, and we'll talk to you next week.
Yeah, awesome, Jesse. Thank you. And again, to your listeners and watchers, just be safe. Everybody's traveling really hard, working hard, but it's the season's getting on, and I can hear it when I talk to farmers who are getting tired. Just slow down a little bit; it'll get done.
I would echo that sentiment as well. Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show on this Thursday, May 26th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.